I want to see gold come down to 3,500. I want to see silver crash to 40 or $38. It is going to be an ultimate opportunity. And the market has a way of whoever chased price, when people are all chasing price and driving it up and they're pure, it's like an emotional move. The market has a good way of shaking them all out, getting them back out, and then they end up taking a loss on it. And then I think we see things stabilize. And then I think gold and silver will be a great opportunity. So I think people should be gunning for 3,500 for gold, 40 for silver, because it's going to be probably the last opportunity to get back into those metals at a crazy good discount. And I think in the next, 5 years from now, we're going to probably see gold and silver up hundreds of percent from here. So the question is, how long is it going to take for gold and silver to correct? That's the big question. And we just have to wait.
Gold today, slightly higher. So a nice move on gold. Little bit of an uptick. The net pattern is still bearish, as I've discussed, but it could still continue to rally up. Really, it could get as high as, I think, around 5,000 before that next leg down comes in. A lot will be determined by what the stock market does. Same thing for silver. Silver could still grind up to about 82.
Gold and silver may still have more volatility ahead, but the bigger message here is that weakness could create the kind of entry long-term investors wait years for. The discussion is not built around panic. It is built around patience, discipline, and the idea that sharp corrections often reset overheated markets before the next major advance begins. Gareth Soloway, a technical trader known for chart-based market analysis, and Chris Vermeulen, a respected analyst focused on trend structure and momentum, explain that precious metals may not be done correcting even after their explosive moves. Their outlook points to the possibility that gold could retreat toward $3,500, while silver could revisit $40 or even $38 if the current euphoric phase fully unwinds. Rather than seeing that as a breakdown in the long-term story, they frame it as a major opportunity. In their view, emotional buyers often get shaken out first, while patient investors prepare for the next powerful leg higher. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
And we exited out of silver at 113 when everything was screaming, and that was the full-on euphoric phase. And now it's pulled back, and now it is trying to figure out what it wants to do. And that's the big question: is what is silver going to do? Is it going to correct and go lower based on Fibonacci extensions? It says we're going to $40 per ounce for silver, which will come right back down to this breakout where the euphoric phase took off. The gold chart is doing the same thing. The gold chart shows, based on Fibonacci, the downside move brings it right back to 3,500, which is gold was functioning normal up until this point. And then suddenly it became all the craze, the euphoric phase. And so the chart is actually pointing to gold coming all the way back down to this point as well. To me, this is going to be an amazing opportunity. I mean, so a lot of people don't want this, but to me, I want to see the stock market pull back. I want to see gold come down to 3,500. I want to see silver crash to 40 or $38. It is going to be an ultimate opportunity. And the market has a way of whoever chased price, when people are all chasing price and driving it up and they're pure, it's like an emotional move. The market has a good way of shaking them all out, getting them back out, and then they end up taking a loss on it. And then I think we see things stabilize. And then I think gold and silver will be a great opportunity. So I think people should be gunning for 3,500 for gold, 40 for silver, because it's going to be probably the last opportunity to get back into those metals at a crazy good discount. And I think in the next, 5 years from now, we're going to probably see gold and silver up hundreds of percent from here. So the question is, how long is it going to take for gold and silver to correct? That's the big question. And we just have to wait. The flip side of that, David, I know people are going to ask, well, that's the bearish side. The bullish side for both gold and silver is we've had this beautiful bull run. Now we've got it building this multi-wave, this bull flag pattern, which can be seen as a very strong pattern. If gold starts to break out and builds a base, it will generate another buy signal at some point here. And then we're off to the races to 7,000, 8,000, 10,000. And so, what I want to do is avoid this type of noise and big corrections and, wasted years. I just want to make sure I lock in gains when it's screaming overdone. And then I want to get back into the asset class either at a killer deal or when it's starting to break out and it's going to have an imminent return. It's going to just start that next run and take off. But I don't want to hold it for a year or three before that happens. There's other places you can put that money and generate return.
Gold today, slightly higher, so a nice move on gold. Little bit of an uptick. The net pattern is still bearish, as I've discussed, but it could still continue to rally up. Really, it could get as high as, I think, around 5,000 before that next leg down comes in. A lot will be determined by what the stock market does. Same thing for silver. Silver could still grind up to about 82. Once it gets to 82, let's see if it starts to head back down. Ultimately, if it breaks this 64, 60, 66, 64 level, it can possibly get as low as 50. I still have that on my bingo card as later this year, silver hitting $50 per ounce and gold getting to 3,500.
The core argument is that markets rarely reward the crowd when excitement reaches its peak. After a strong surge, gold and silver entered a phase where sentiment became too one-sided, and that is usually when price action starts punishing late buyers. Instead of chasing momentum, the smarter approach discussed here is to wait for normalization and let the market cool off. The technical outlook discussed indicates that gold could reach $5,000 in its next upward move, while silver could rise to approximately $82 before a possible deeper pullback. These levels are cited as upper technical targets based on current chart analysis. However, even with such possible upside, both analysts urge caution, emphasizing that the most attractive opportunities may arise after sharp corrections bring prices back to previous breakout zones. Thus, the focus remains on preparation, preserving capital, and readiness to act when the market resets to more reasonable valuations. Let's return to the interview.
To keep the markets from pushing through on oil's decline. Today, again, we see the stock market opening or the pre-market action higher, looking at the next key level. What's the next key level? There's a gap fill at 689.09, and that level will be the level I watch today. It's about $1.40 away, or 14 points on the S&P 500 away from where we'll be opening the day, and that will be a key level to watch. All right, so I'm going to be even looking to short the S&P, probably via the spiders, or maybe I'll do a double inverse ETF, something like SDS. That would be a level there that would be attractive to me, even as a day trade. And also, let's be fair, this could be where the market stopped. Now, if we can push through this level, there is a good possibility we can retest the highs on the market, the all-time highs on the S&P here, right up in this range, even maybe pushing through. But keep in mind, a lot of investors are running into this market because they assume it's going to be a repeat of 2025. Now, in 2025, we had the tariff sell-off literally 1 year ago, guys. So again, March and early April. We bottomed basically around April 8th. Or April 7th right here. So virtually 1 year ago. Now, last year, we had this big move up like this, and we made a new all-time high going into October before kind of putting in that rounded top. Part of the reason we're seeing such a robust rally right now is investors are basically in this deja vu moment, expecting this continued rally all year long. I'm not in that camp, and I'm going to show you why. Simply, when I look at the charts, and remember, I focus purely on the charts, last year, we were at the bottom of the parallel. So if we go to the parallel and we zoom out, this was a parallel that starts back at the COVID lows, March 2020, bear market lows here, and then ultimately our low from the tariff sell-off. If we look at our pullback here, what did we get?
I mean, I don't want to get too much in the details here, but we've had this last big run. We'll use a Fibonacci retracement telling us where gold should technically pull back. Based on Fibonacci retracement, usually you pull back 38% or 50%. And so we've already hit the 38%, it's bounced. The technical analysis using Fibonacci on gold actually points to coming down to about 3,600, which is that 50% retracement. So if we were to just use an extension of where it looks like gold is going to go for the next run, we can calculate that out based on the current pullback. If gold just starts to find a bottom right here, we're going to see gold move up to about 8,000. That'll be the next upside target. If gold ends up correcting deeper down to the 50%, it'll go to about 7,500 to the upside. And then from that level, it'll probably have some pause and pull back, and then we recalculate the next leg. So I like to calculate just one leg at a time. So that would be a pretty good move. I mean, obviously you go from 3,500 to 7,500. That's an easy 100% to the upside for gold. So those are kind of the next sweet range, depending on where gold finds a bottom. And I do think, if gold does go down to about 3,500, we're probably going to see a big sell-off in equities. It might not happen anytime soon. It still might be 3, 4, 5, 6 months out. But I do think we're eventually going to see a big bout of selling in equities. Metals will get pulled back. Silver will come back as well, come down to probably $40 an ounce. And then we'll find a massive buying opportunity, a major bottom in precious metals based on technicals to start stacking again.
What makes this outlook stand out is that it combines near-term caution with long-term conviction. The view is not that gold and silver have lost their larger bullish case. They may need to reset first. That distinction matters because strong secular moves often include sharp, uncomfortable retracements, especially after euphoric price action draws in emotional buyers at the wrong time. In this discussion, a return toward $3,500 in gold and $40 to $38 in silver is presented as a potential final discount zone rather than a bearish endgame. The idea is that once excess speculation is washed out, both metals could stabilize and begin building the foundation for a much larger advance. One of the clearest predictions here is the longer-term expectation that, over the next 5 years, gold and silver could rise by hundreds of % from those lower levels if such a reset plays out. That makes this a conversation about timing, discipline, and emotional control more than simple price targets. The next move may not reward impatience, but it could strongly reward those who stay focused on structure instead of hype. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.